Greetings. Should breakout traders continue looking for bullish stock ideas even in a generally bearish market environment? Well, that's the question I'm going to answer in this video. But first, I greet you in the love light of the one infinite creator. All right, let's go. We are seeing a market here that has been down. This is now April 10th. So we've seen the market's been down a couple months here off the highs and continues to be down even today. So the question is, in this type of an environment where stocks are being smacked down, should breakout momentum traders have an interest in the market? Should they just walk away from the market, never to return? Or should they continue their daily work of looking for the next gem? Well, I've been doing breakouts for clients and myself for almost 22 years. And I'll tell you one thing I've learned is the work in itself never continues. Let me give you an example here. I'll show you one past example and one current example. All right, let's go here. This is Netflix, and we're taking a look at a period here of a very famous period in 2008, 2009. So this is Netflix, 2008, 2009. Take a look at that same period, S&P 500, the same period, 2008, 2009. See the difference right there? For example, I'll show you. Take a look at the S&P 500, began the year of 2008 right here. It ended the year right there. So, of course, a huge bearish year for the S&P 500. Now, compare that with Netflix in 2008. It ended 2007 here, ended 2008 right there. You notice the difference? For the entire year, it was almost unchanged, maybe even slightly higher. But that's not the key. What I want to discuss is take a look at what was happening at the beginning of 2009 for Netflix, right here, January 2009. You can see that there was an interest here for breakout traders as it was moving to fresh monthly highs with that breakout in January of 2008. Compare that with the S&P 500. This is January of 2008 right there. S&P 500, after a very nasty year, was still down in January and had another 2 months before recording intraday lows. So you can see what I'm saying here is, even as the market continued this downward washout, there was a reason for those who trade the market from a bullish breakout perspective to be paying attention to breakout ideas, because this Netflix breakout here should have been of interest. And of course, I'll tell you something that we should not forget here. Those who are playing the breakout in Netflix in January of 2009 were taking a huge risk. So you never know what the environment is going to be. But the situation was being presented here that there was a stock breaking out, at least one of the stocks that was breaking out at the time. Now, if the market was going to fail to hold the breakout status, let's say if this breakout rolled over, then that would tell you that that was not the time for the stock to do well. You'll notice after that breakout, it never looked back. After that breakout right there, stock has never looked back. So even if you buy a breakout and it stops in its momentum and starts failing, especially in a bear market, when breakouts fail in a bear market, don't mess around with them. Just get out. Wait for the next breakout. I'll give you an example of what I mean by this. See, if you had missed the initial breakout in Netflix because you are not sure of the market environment, this was too early for you. There was another breakout after it settled down. There was a future breakout attempt later on in the year. So this was also of interest. And if you missed that, there was also another interest period here after 1 month of rest. There was another entry here. And if you missed that, no problem. Down the road, those 2 months of rest and another breakout. By the way, for the record, Netflix would go on to move from 5 here to the highs here of about 42. And this took about, let's call it, under 2.5 years. And I know for most of you that is an insane amount of time to hold. But if you play the traditional breakouts, that's exactly what you need to do. The stock is paying you. Why get out? And you could have taken profits along the way anyway, or scaled out. Either way, the entry was desirable in January of 2009 when the market was still in a bear market environment. All right, let's go to the current market. So in the current market environment, we've seen the Nasdaq drop off its highs about 26% from the highs to the lows so far. We don't know whether we're going to see the market drop even beyond those levels, but that's the current maximum drop off the highs from here late 2024 as of early April 2025. Now, this is the look of the NASDAQ. Of course, this is a market that should scare most people, and rightfully so. Now, compare that with Palantir, PLTR. You can see that while the NASDAQ is still down for the month of April, so this is April, right? Market's down. But take a look at PLTR. As of the current recording of this video, the stock is positive for the month. Not only positive, it is actually moving above the prior monthly closing high. So as long as it is breaking out above February's monthly closing high, and that is at 84.92, this stock is breaking out. So you can buy the stock in theory, and if it continues holding above the breakout level, there's no reason to sell, anticipating that it is suggesting that if the market is going to recover, this stock might start also being one of the leadership stocks in the market. And take a note of how strong the RSI is. It's very desirable. It's trading at about 88. That is just a sign of power, right? If you understand the RSI, this is power, and that's the only way you can look at it. MACDs are good, and you can see that it is outperforming the market as of right now. So lots of things are going well. Now, if the breakout fails in a bearish environment, you don't want to mess around, because if the breakout fails, then what that is telling you is that this is failing because the general market continues to be under tremendous distress, and that the general market is going to see another plunge down. But if the general market is to recover little by little, then as the market recovers, this stock is going to be leading the market higher. So we can anticipate profits that could amount to big profits in the coming weeks and months ahead. So yes, even in down markets, there is a reason to continue doing the breakout work, looking for the next gems. I am Eric with Mother.com. I leave you as I found you, in the love and in the light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.